Hello everyone, my name is Michael Lamott. I am the founder of ChartYourTrade.com, and our goal is to inspire millions of hardworking people just like you to take advantage of the stock market. And the way that we're going to do that is by sharing a lot of the things that have worked for me in my trading journey and will help you in yours, so you could do it part-time, with a family, with a job, with children. The thing that I want to talk to you about today is when to sell. And one of the most common sell rules out there is a hard break of the 50-day moving average. So let's talk a little bit about breaks of the 50-day moving average. The 50-day moving average is a spot where institutions, major hedge funds and the major mutual funds, the spot where many of us take our retirement account and let our employer pile money into, it's those institutions that are the ones that are driving the market, and they will typically step in at the 50-day moving average to support their positions. So if a stock is falling below its own 50-day moving average, and more importantly doing so on heavy volume, that's a big sign that the institutions are starting to sell and they're no longer supporting the stock. And that's why the 50-day moving average is important, both from a trend following to many trading strategies out there. So we want to be cognizant of, at least, is our stock trading above the 50-day moving average? And when it's pulling back into it, is it being supported? Does it pull into it on lighter volume? And does it rally off that level? A major sell signal will be when your stock falls below the 50-day moving average, and it does it on very heavy volume. And that again is the sign that major institutions are getting out of that stock. Typically, when this happens, and for it to be a major sell signal for us, and not just a pullback or the market figuring out if the move is going to continue higher or not, is if your stock has had a significant move already and it could be done. So what do I mean by significant move? Generally, like if your stock has run 50%, 100% or more, and this is a move that's taking several months or a year or more to move, then that is when, if you see a sharp break of the 50-day moving average, then it's a sign that the move could be over. So now you have two things kind of working as the sell signal. Number one is that hard break, and number two is, okay, so it's doing that after having run up 100%, 200%, or something much greater than that. And the stock that we're going to take a look at had that kind of a gigantic move and that kind of hard sell-off. So we'll take a look at that. It's going to be Applied Optoelectronics, ticker AAOI, just to give you a little spoiler. Sorry for those of you that were waiting for the surprise. Another way to confirm that this break of the 50-day moving average is indeed a change, that this is going to be done for a while, is it breaking character? Is it breaking the character of the stock? Meaning, was your stock getting support at the 50-day moving average consistently all the way up? And is this slice below out of character for the bulk of the move? So what I mean is this. So if your stock had a nice controlled upward trend, and then all of a sudden there's this giant spike down there that's out of character for the move of what you've seen for the past several months or so, then that's a sign that, oh, something's happening with the stock. Another reason why this is a sell signal. So now you have three things to look for. That sharp break on heavy volume, and it should also close near or at the bottom of the trading range, that's another sign that sellers are in control. The second thing is that it should correspond to a decent run in the stock already, so a move of 50, 100% or more. It should be breaking the character of the stock, so meaning that you have this nice controlled move for an extended period of time, and then all of a sudden the stock is doing something that it hadn't done in the past several months. So it's kind of breaking expectations, not just for you. Well, you and I can't control. We don't have the firepower to dictate which way the stock is going to move. It's breaking the expectations of the institutions, right? So if all of a sudden something changes and they're exiting the stock and they're doing so in a major way, that's also sending signals to them too. And we'll see a lot of volatility and choppiness in the stock for the next several weeks, if not months, and we'll see the stock roll over if it doesn't catch support somewhere lower. But either way, for you and I, it's going to be a sign that, okay, it's time to step away and let the stock do what it's going to do and let it set up into another base pattern that we might potentially want to take advantage of. So those are three very simple ways to see if the break of the 50-day moving average is indeed a sell signal that you would want to adhere to and listen to and say sayonara for now. And well, let's take a look at a clear example. So let's take a look at AAOI and see what it did recently that should have definitely been a sell signal and a reason for anybody that was holding to step away and get out of that stock. Okay, so there's a bunch of things that are going on in this chart, and we'll go through all of them, but the main thing, again, is that break, that definitive break of the 50-day moving average. So let's take a look at AAOI and pick it apart and go through each of these things. So first, let's take a look at this weekly chart down here, because this is showing you where we originally picked up AAOI. So it initially came onto the Chart Your Trade MRI scanner, that stock scanner that we developed. It came onto it way back here in November of 2016. And so you could see the move, and this is when it was kind of like chopping around. That red line is the 10-week moving average. If you're looking at it on a weekly chart, the 10-week is the same thing as the 50-day moving average on a daily chart, more or less. And so you can see that it rallied above it over here, and it did it on heavy volume. Let me blow this chart up a little bit. So that was the first time, really, over here. You could see volume starting to come in, and we're talking about volume discovery, and you see this bigger wave of volume coming into the stock. So that was the first signal that you wanted to get long, and you see how the AAOI didn't always completely respect the 10-week line or the 50-day moving average, but there's a big difference between the break of it over there, when it did it while it was still kind of basing before it started to take off. Then there was this one, and then it's kind of breaking it again over here, but then there was this big chop down below the 10-week line, and that was the final goodnight, at least for now. So let's look at it on the daily chart, because I think that will be a little bit more useful. Well, we are still talking about the 50-day moving average. So looking at the bigger move that AAOI took off in January, it started to make this big run. So from January, when it initially broke out, it ran over 100%, about 130%. So when it started to come back in and you see it fall below the 50-day moving average, like it pulled back to the 50-day moving average. If we're looking at this bar right here, that was an ugly day, and it dropped hard, and it fell to the 50-day moving average, and it did it on heavy volume. But when we saw it start to slice below the 50-day, it, like, volume wasn't that heavy at all as it was falling below it. So that's one of the times where, if you're looking at it and you're trying to see, like, well, it did have that significant run up that we spoke about, and it is falling below the 50-day moving average, which is kind of out of character for the stock. It's the first time that it's doing it, but it's not really out of character as far as the price action itself and the volume, because, well, we see that, just look at the price ranges on the bars. It kind of fits in with how the stock has been moving before, right? The only thing is that, yeah, it's falling below the 50-day moving average. So if you were going to do this as more of a way to manage risk, then I could see exiting right there. And another thing, when you're, I know I'm getting off topic a little bit now, but when you're trying to sell and place a stop loss where you say that, okay, if a stock falls below X, then I'm going to exit, it shouldn't only be based on a moving average. You want it to be based off of a couple of different things. So if I'm looking at this chart, I would say, okay, I would want it to be below a moving average, but I would also want it to be where support should be. Support should be right below this gap, right? So the low right there is 40.55. And it just triggered it there, right? So 40.28. So if you let those two things coincide, then you're getting shaken out right at the very low before this thing is going to rally again. So that's just something that happens when you're managing these kinds of positions, and that's one of the reasons too, when you have a bigger move like this. And what shook me out later on, or why I chose to exit later on, if you watched the earlier video of why you should focus on risk management and you will win, is because if you're just sitting around and waiting for these kinds of sell signals, then sometimes you're allowing yourself to have a decline of 30%, 33% in this case. That's not something that I'm particularly comfortable with in a swing trading account. So let's say you're taking the entry where it's breaking above this inverted head and shoulders pattern, and you're taking that breakout. From there, AAOI rallied, right? Let's see how much it rallied. So from this point in May, it rallied about 50%, okay. And then it starts to come in on us, and it takes our 50% gain all the way back down to a 14% gain. I don't know about you, but that's not something that I'm comfortable sitting with it or letting it pull back that far. Definitely not with an entire position. If it's me, I'm scaling out of that along the way. And do I allow it to pull back all the way there? Well, it really depends on what the goal or what the idea is for the trade. So if I'm trading this for my shorter term swing trading account, then definitely not. I'm not allowing a 50% gain to turn into a 13% gain. Now that's just, for looking at something on a shorter term basis, I'm not going to give up about 80% of my gains to play a potentially bigger move. I'll still keep it on a watch list, of course, but for the shorter term, you want to be locking in those gains and scaling out in stages. But anyway, back to the 50-day moving average. I just have so many thoughts on this. It's hard to just stay on topic. But all this stuff, everything related to stocks, like everything's all interconnected. So I hope that that's part of it, and you can see the thinking and the rationale, and hopefully that is something that's going to be helpful to you. But anyway, so you have this move, and it's pulling back, and just based on the price action alone, you're not getting that the 50-day moving average sell signal based on this, right? Like, so the first time that it touches it is this day here, and it rallies off of it and closes above it intraday. Okay, fine. Then over here, it's starting to move below the 50-day moving average, and it's closing at the lows, but the volume on that day was actually below average, right? So it's not triggering the sell rule. So if you're exiting based on risk management, that you don't want to be in a stock that's below the 50-day moving average, okay, fine. But as far as the sell rule is concerned, you don't really see the major institutions piling out of AAOI at that point. And that's the real purpose of why it's a rule. It's not just a signal, it's a rule that's saying that, okay, the major players are exiting this stock. So is that happening here on this day? No, definitely not. It's not, because while it's not rallying off at that point, you're not seeing the other elements as well. You're not seeing the big volume. You're not seeing the change in character just yet. And you're also not seeing the big giant rally that's killing it. You saw at this point over here, you saw a little bit of a change in character, and you saw at least some major players starting to exit. Yeah, that's a high volume drop, but you would be looking for something that's more of a sustained move, or something that was greater than the past. The volume would be greater than what you've seen for the past several months. You don't see that here. So it's a sell signal, but it's not triggering the rule. So, okay, so let's say you held on, or let's say you even initiated a position over here, right? And I actually added on that day. I'm pretty sure I added on that day. But let's say you're somebody that took this position here. Let's say you saw this descending trend line, and you knew that Applied Optoelectronics was a stock that had the potential to make a big move, and so you were going to buy if it broke above that trend line and rallied, and let's say you caught it, and it just worked out terrifically in your favor. So you buy this and it rallies, and in the prior video I spoke about how I actually exited at about 3:58 on this day right here, right before AAOI reported earnings, and back then I was talking about that it had absolutely nothing to do with the technicals of the stock or having a crystal ball or anything. It had everything to do with risk management and thinking about, okay, it's reporting earnings, where's support? Support is nowhere nearby, and so if it did pull back to support, it's gonna fall real hard, real fast, and that was not something that I wanted to risk for another 10 or 15% if it was going to continue to rally. So I just exited the stock completely at that time. But let's say that you're somebody that decided to hold on, right? Let's say, well, looking at it from the major institutions' perspective, they can't just all exit all their entire position all at the same time. Many players are exiting right there. That's the biggest volume this stock has seen. Let's see. In years. Since its IPO, that break of the 50-day moving average was the biggest volume day by a mile. So that right there is about as clear of a sign as we could possibly get that the big institutions are selling. And that's the reason why the 50-day moving average or break of the 50-day moving average is a sell rule. Not that it's, just some magical level where we should be exiting. It's because that's where, like I said earlier, that's where institutions typically come in and support. They're clearly exiting based on that kind of a volume break, based on the price action and the stock closing at the lows of the day. Yeah, you might get a little rally here or there off some lows, but you see now that the 50-day moving average is also starting to act as a resistance level. Right? So let's continue with this move. So it breaks below the 50-day moving average. Does it on the heaviest volume ever in its own lifespan. It closes at the low of the days. It's clearly breaking character. There hasn't been... so anytime a stock drops about 35% in a day, that it's breaking character somehow. So just to stick with the move, so it's rallying, it's trapping around, and it rallies back up to the 50-day moving average. Now the 50-day moving average, if you look at this, it's starting to curve downward, and it rallied to it, and it didn't even touch it, and sellers came in and they started selling at that level. So that's showing you that the institutions that are still trapped, that still have plenty of shares that are back here, they can't just unload everything or it would really drop the stock. So what they're doing is waiting until you get a little bit of a rally, and then they're selling more. And you could see that based on the volume. So it broke the 50-day moving average. It couldn't rally. Just looking at this right here, there's still no real clear sign of support. I mean, maybe... No, well, what's the low of this? The 55.15. Maybe we see 55 become a support level. It sort of lines up back with this zone back here, right? This former breakout level. You do have this black line catching up. That's the 200-day moving average. So maybe that becomes the area of support. So if you wanted to test getting long this stock, maybe you take a test at around 55, but until AAOI proves that it's got its mojo back and can break above and hold above that 50-day moving average, it's done. It's done for the foreseeable future. I wouldn't go so far as to say that it's done forever, based on these technicals, but it's at least done for now. So, well, when you see this these breaks of the 50-day moving average, if it's at a stock that you own or it's a stock that you're interested in, you need to be aware of these rules, and not just of the rule, but what's happening with the rule and why the rule even exists. So I think that's everything that I have to say on that. I hope that was helpful for you. Thank you all so much for watching. I truly appreciate it. If you have any questions at all, please take a moment and leave them in the comment section below, and I will personally answer them for you. Also, please like the video and make sure that you subscribe to our channel so that way you receive all of our updates. Thank you again so much for watching. I truly appreciate it, and I'll see you again very soon.